This is Scott Whitwam with your morning real estate investor update. In today's top story, falling rents. Rent prices are down again and expected to fall in 2025. According to Realtor.com, rents fell every month this year. More new units are expected to be built in 2025. With a surge in rental supply, this is expected to put further downward pressure on rents next year. There are 920,000 multifamily homes currently under construction, which is 50% higher than what was pre-pandemic rate. As these new units are completed over the next year, rental inventories will increase, likely leading to lower rental prices. For many investors, this is not great news. Lower rental rates and more competition could add some challenges for vacant properties. I would expect some proactive investors to offer some rental renew relief to existing good-paying tenants. It's always cheaper to keep a tenant than to have to replace one. Today's mortgage rate update, rates moving. As homebuyers' confidence begins to grow, mortgage rates move down again this week. The market seems to like the new jobs report, and in anticipation of another Fed rate cut here in December, Freddie Mac reported this week that mortgage rates decreased to their lowest level in over a month. Despite just a modest drop in rates, consumers clearly have responded as purchase demand has noticeably improved. The responsiveness of prospective home buyers to even small changes in rates illustrates that affordability headwinds still persist. Freddie Mac is reporting that the 30-year fixed rate mortgage ended last week at 6.69%, which is another downward move from the 6.81% the previous week. And the 15-year rate ended below 6% at 5.96% compared to the 6.01 last week. In today's wrap-up, luxury REI. For real estate investors focused on luxury properties, there's some positive news coming. The AP is reporting that beginning next year, Fannie Mae and Freddie Mac will be able to acquire loans for up to $806,500 on single-family homes for most of the country. These conforming loans are classed differently than the jumbo loan market. The conforming loan limits are adjusted annually to reflect changes in the U.S. home values. Values have been rising, even though it's much slower this year due to a housing slump, the worst sales since 1995. The 2025 single-family home conforming loan limit will apply to most of the country. There are some higher loan limits for certain states such as Alaska and Hawaii, and in select counties like Los Angeles and New York, where the loan limits to be $1.2 million starting next year. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.